profits are going to come. And so let me just stare into my crystal ball, and I'll tell you why I think that's going to be the case. The election results are already factored into this market. This market is not down because of the uncertainty in who's going to win the election. The odds makers in Vegas and the big bookies in the UK are giving Biden a 70% chance to win. I mean, to me, it doesn't matter. It doesn't. In historically, it doesn't matter if it's a Republican or a Democrat in the White House. But the point is that that's not why this market is down. Why it's down is because we're waiting for the decision on $2 trillion in stimulus packages. But what we're going to see after the election is we're going to see the start of the next leg of the secular bull market. And it's going to have 2 or 3 years to run. So there's going to be lots of time to make big money. And the reason I say that is because we're going to see the next stimulus package come in to play. Now, they threw $6 trillion at it in March, and the $3 trillion of that went straight into M1 money supply. And we saw the markets double in that time period from March to September. So you throw another $2 trillion. I tell you, I've never met $2 trillion I didn't like. We're going to see, we're going to see a market run, and then followed by that, we're going to see a vaccine. It's going to be available to the general public probably by the summer of, 2021, and then we'll have some, return to normalcy. And I think what also we're going to see is that the Feds are going to let inflation run in the 4% level, and they're going to keep money very, very cheap. And they're going to do that so they can eliminate this huge deficit that they've incurred and accumulated through this pandemic.
Right.
And they'll do that by monetizing the debt. I mean, in 1945, they did exactly the same thing. And 10 years later, they had eliminated 40% of the debt through monetization. So the key to that, though, will be to own assets other than currency. And that's going to be very important. So stocks are going to be going to be a subset of that hedge against inflation. Gold and oil will be major sectors in the near future. Not yet; they're not quite ready, but I think gold's going to hit the 2,200 and then 2,500. Just as a side note, 6 months ago, I said my targets for gold were 1950, and as you know, just last month they hit 2,000. I mean, so. Yeah, so we're looking for gold at 22 and 25 as we see inflation come in and they start monetizing the debt. But having said that, our main focus is always going to be on technology stocks and the biotechs. That's our main focus.